What's going on, everybody? It's October 28th, 2022, daily log episode 40. So today was actually 40. I was mistaken. Yesterday was actually 39, so I'll make sure to edit that. Today was very interesting. And last time we talked, so last night, I was describing how you should just be careful. I didn't expect this large of an expansion, honestly, coming into the day. But I said to pay attention to the weekly time frame. So now that we officially closed, we have closed above the premium end of that fair value gap on the weekly. So what this suggests to me is now we can start looking for other PD arrays to use, because this is no longer necessarily something I'm looking for. I'm going to be looking at this weekly bearish order block. To me, it's not incredibly the cleanest, just because it's not really paired with the fair value gap, and we've already kind of used it once before. So that does hold a bit of concern in my mind. I think I drew your attention to the 2-week, so we closed above that one as well. Let me see if I can find on some maybe a 3-day. Yeah, I mean, this bearish order block is the cleanest so far to me. I think we're just reaching up into a premium relative from that dealing range high down to the dealing range low there. So if I go out to a daily chart, equilibrium was sitting here. So I think we can draw up into that optimal trade entry 71%, 79% area, which fair value gap is right in that area coupled with that bearish order block. So a lot of good things align. I annotated last night how we closed above this volume imbalance, which is a really great sign for us to continue bullish if we really were bullish. And the reason I had a lot of hesitation on like really screaming being bullish was due to A, Friday, B, there was kind of a swing high set in place. In a sense, we ran the buy stops in that weekly fair value gap. So I was just kind of waiting for more information, especially if you're looking at NASDAQ. NASDAQ was it made a lower low here, at least took out the low here, and obviously US 500 did not do that. So it was kind of in like no man's land. So it was kind of giving me a lot of mixed signals. I didn't really know what to think from that. US 30 is incredibly bullish, which is very surprising to see. It's very, very surprising to see. So, we may have to switch gears, from being bearish. I'm not saying to change it right now, but it's something to keep in the back of your mind. Like that's how being an analyst is. And I get the bias wrong so many times. Like I can't tell you the amount of times I get it wrong, but in the session, it will prove to me whether my bias is wrong or right with the model. The model will form regardless. Most of the time, the model is going to form on the side of the bias that it's going anyways. And I'm able to switch gears very, very quickly. And you all have seen that in real time, me being able to do that. And that's something that just experience, comes from is just watching these markets. And obviously you always want to have a bias and a narrative coming into the session or the week. And even if you get it wrong, it doesn't mean you lost a trade or you took a loss. It just means, okay, if I'm wrong on my analysis and I was proved wrong, just get into sync with order flow. It's pretty simple once you kind of start getting the hang of it. So even today, if I was trading today, I would have been able to see that we were clearly bullish. Looking at the 4-hour time frame, I touched on this. I touched on this dealing range here that we dropped down into a discount relative from the dealing range low to the dealing range high there. Okay, so we dropped down into the discount. I said we didn't need to return into this fair value gap. The reason being we've already used it once. And if we returned back into that fair value gap on the daily time frame, that wouldn't make too much sense to me. I would rather have just stayed open, which it did. Looking at the 1 hour, looking at the dealing range on the 1 hour here, to me that's the dealing range low to dealing range high, drop down into a discount. And I said, in order for us to really be bullish, I would need a fast, energetic move in order for me to really be bullish, because the drop here was so significant and so fast. I would have needed a very move like today to happen to really be bullish, which in fact did happen. So on the 1 hour, We ran out sell stops, dropped into that discount. So the reason I'm saying this is it's the backbone and the context to the entry pattern that happened today. Sometimes you don't, there was a sell stop run today, but it wasn't like super significant on the 5-minute or lower. But you can still have a stop run on higher time frames, and you may not get that stop run on a 15-minute, 5-minute, and lower. But if as long as you have it on a higher time frame, you know the bias, you know the underlying draw and liquidity on higher time frames, you know you're in a discount on higher time frames. All you need is that fair value gap and a discount. As long as you're having that market structure shift and a good displacement on lower time frames, you don't necessarily need that lower time frame sell stops to be ran because the work has already been done on a higher time frame. So yeah, on 1 hour, we already ran out sell stops on a 1 hour. We're dropping into a discount. So all you need at this point is really just a nice displacement with a fair value gap inside of a discount. So if we drop down to a 5-minute, I posted this in the Telegram today. Let me take some annotations away just so you can clearly see this. So you can see here right at the open, actually it wasn't at the open, 7:30 is when we had news, or at least my time. We ran sell stops underneath the low here. So not a huge sell stop run, but again, on the higher time frames, we already did the work. So it's nice to see that we displaced higher. You have that 5-minute closure body above the high here. So market structure shift, nice displacement. Then we return back into the fair value gap. And I always like 5-minute fair value gaps that are layered all the way down. So even on a 4-minute, it's there. 3-minute fair value gap there. 2-minute, same thing. And 1 minute as well. Okay, so that's what I like to see. And I like to see the 1, 2, 3, 4, 5 all have a bodily closure above the high there. So we all got that. That's all the criteria that's being met for me. Next step is price dropping down into a discount. So you can do dealing range low to dealing range high. Equilibrium is sitting there. Fair value gap is underneath the discount or underneath the equilibrium in a discount. So you could have entered anywhere in here, honestly. If depends on your rules and criteria for risk, but for me, that 25% to 50% of the fair value gap would have met my criteria. Your stop loss would have went beneath the low here, and obviously you would have been targeting the high above here, buy side liquidity, and then just letting whatever your take profit is, let that run. Even for me, I would have been out 20, 30 points and let a runner go, but that's just my rules. That's my criteria. Now, let's say you miss this move. Next step, after you see price displaced like this, okay, I can reel it back in time. You should be watching this fair value gap here. You should look at the 4-minute, the 3-minute, the 2-minute, the 1-minute, and you're looking at it and seeing if they're all layered fair value gaps, which they are. The next step is waiting for that dealing range high to form. Okay, now that since we dropped down, that's your dealing range high. Your dealing range low is here. And you can get a little bit more clear picture maybe on a 2-minute or a 1-minute. Okay, that's your dealing range low. Your dealing range high for value gaps inside of a discount. You can set your limit at 25%, 30% or 50%, whatever you like. Stop goes beneath the dealing range low. You're targeting the buy side liquidity that's resting above the dealing range high, and then however much you would like. Okay, so if we play this out, price drops down into the equilibrium perfectly, and then we just ultimately expand higher. And this is, do you see how compared to yesterday's price action or any other days that we've had super choppy price action where you don't really have a nice premium or a really nice discount for price to drop into the fair value gap? Like yesterday, we really didn't have any nice good displacements with a return into a premium to go short. Do you see how if you just wait for days like this and you start studying these days and you start logging these away and you start just waiting for higher probability setups, this will return so much more. Even if you had to wait all week for Friday to hit, you could have profited so much today if you just waited for these high probability A+ setups, because the narrative is the backbone. We're bullish on the daily time frame. You have the 1 hour dropping into discount, taking out sell stops. You have the 5-minute taking out sell stops, displacing higher. If you didn't feel comfortable with this one, this was a plus setup trade right here. I would have took this 100 out of 100 times. There would have been no doubt in my mind that this would have worked out. And obviously, there's always the chance of losing, but this is a pretty solid model for you. Okay. You would have been targeting the buy side liquidity that was resting above the high here made from Wednesday, resting at 38.86. And then I also had your attention all week at these relative equal highs resting at 39.20. And we ultimately closed the day almost taking that buy side liquidity out. And then also the backbone that US 100 made a lower low here. Okay. US 500 did not, and US 30 did not. So that's a bullish SMT divergence, especially the way US 100 dropped. That's a huge bullish SMT divergence. And I think that's it for today. I'll probably talk to you guys tomorrow or maybe Sunday with a weekly forecast and update. Just going further, going into next week, I'm going to be not doing the kind of live annotating throughout the session. I'll maybe do a morning forecast or log like I was doing, and then that's probably going to be it for the session. And then after, I'll kind of report back with what happened with me, my analysis, and then I'll do the daily log as well. But I think it'll just take a bit of stress off my shoulders. I think it's a little bit too much for me to try to be annotating everything, while I'm sitting here watching price. I only intended to do it for a couple of weeks just to kind of show you guys what I'm capable of and kind of give you that real in-time tape reading to see how I analyze the market. So I think that's going to be it. Until Sunday, I'll talk to you guys. Good luck and good trading.